So let's start with you, Micah. In the description of the session, it says there will be a pivot from nature-based solutions to large-scale engineered approaches. I think that's a bit of a red herring because, I don't think there will be an entire a pivot. But what kind of factors do you think will play a role in that? And do you think there will be an entire pivot?
I think in my opinion, there will be a pivot. But if it's entire, I'm not so certain yet in the near to mid-term future. So currently. As we see it, there are sort of three types of solutions. You have the nature-based solutions, but there's also the hybrids, such as BECS, that use bio, but also use engineering. And there's the full engineer solutions like DAX. And actually, you need all three to get to the target and to avoid the main impacts of climate change and really to make up for that part of emissions that cannot or are too expensive to reduce. So we believe all three are necessary. However, in a shorter time, we see that nature-based solutions are still the most cost-effective, but we also see that there are increasingly issues and concerns. So there's concerns about the baseline, like what will it actually add, these nature solutions such as reforestation, also about durability. Can we say that this carbon is now being stored for 100+ years, or how can we be certain of that? And then the third one is the susceptibility to hazards. So there are real concerns that should be addressed. However, in our opinion, seeing that engineer solutions will now scale up super fast and completely overtake it. We don't see that happen yet, although we see sort of a middle ground being found with more interest in bio-oil and biochar, for example, and BECS.
So Charlie, going to you. Howden is an insurance broker and you are leading the carbon insurance division. So you've got your nose to the ground in terms of what's happening in the market. Well, I'm going to say that you have your nose to the ground anyway. Are you seeing a kind of flurry of activity going in the direction of large-scale engineering, or is it still heavily towards nature-based? What's your sense?
I think the first thing to mention is that I wouldn't say there's a big scale going into either right now, and that's part of the problem. We're seeing very much a shift in the sort of early stage equity investments going into engineered away from nature-based projects, and that's where most of the capital is coming. But that means that in terms of traded volumes, actual issued credits are still very much coming from the nature-based side of things. But further down the line, as these engineered projects start to come more and more online, we'll see that shift come through into the more visible traded market. I think one of the things, just to build on to that last point, is that part of the issue with the nature-based projects, which is solved in the engineered space, is around the measurability, and investors want to be able to see things that they can measure, whether it be durability or volumes or these sorts of things. And that makes those sorts of projects much more bankable. And by being more bankable, you're going to see more money just naturally flow into that sector. But obviously, the cost is much higher than in the nature-based solution. So there's always a trade-off.
At Alpha Laval, Mariam, you are leading carbon capture, utilization and storage initiatives. So you, again, will also have a sense from the market about where their companies or industries are looking into carbon capture technology. What kind of things are you seeing, and what do you think will actually drive, what kind of factors are going to drive more activity in that direction from your perspective?
I think if I just break it down into two things, there are like the nature-based solutions and engineer-based solutions. And I see it like, as the audience has talked about, like scalability, the fact that you can measure, you can scale it up, you can say 1 million ton. What's the efficiency in terms of the capture of the CO2? What can be done? That's a very important factor. Another thing is obviously the land base, the land constraint that we're having right now. When you talk about projects, if I be very specific, for capturing 1 million ton of CO2. And to your question around the large scale, like something like 1 million ton capture is a large scale, or at least in our language at Alfa Laval, we call it a large scale project. For capturing 1 million ton of CO2, you would need 96,000 square meter of trees. And that's equivalent to South Korea, the area of South Korea, to just give you just a bit of a measure. And where you look at projects like just direct air capture, I will mention Strata's project, 500,000 tons of capacity, so half the capture that we're talking about. In the US, in Texas, the area required is around 60 acre, or equivalent to 0.3 square meter. It's 96,000 versus roughly 0.6 square meter. So the scale of the land constraint is also very important. That's what is also pushing these engineered solutions to move ahead. We see a lot of projects moving in some certain industries, like cement is moving very well, I would say. We see DAC moving very much in US, I would say, in terms of region. And then pulp and paper is becoming way more attractive for investors, as well as also the end customers. This is something that we can see also from Alfa Laval in terms of what we are quoting.
That's very encouraging, given that we need a lot of paper for the newspaper. That's the source of our major emissions. Jens, RWE, I think Kees Hansma, I think alluded perhaps to the project that you're working in his comments about connecting the Delta Rhine corridor with West German industrial areas. You're focusing specifically on BEC. So what are you seeing, or where are you hoping that the factors will unlock some of the projects that you're focusing on at the moment? And maybe you can tell us a bit about them.
Yeah, well, we are looking at, RWE, we are one of the biggest power producers in Europe. So we're coming from the electron business, from the power business. So the first thing what we of course do is look also for our power stations, what can we do? We are having a very ambitious growing green strategy, which means that by 2040, as one of the largest utilities of Europe, we want to be CO2 neutral. And to get there, of course, there's a massive build-out of renewables, but at the same time also looking into still delivering the thermal flex that society needs to be able to operate what we to operate. And that means that we also need to decarbonize conventional power stations. And that means that we also looking especially into how can we decarbonize gas power stations, as in the hydrogen conversion, or CCS, or gas-fired power station, but then especially also into gas, where that is something where we can convert for coal-fired power stations, which are huge, from being part of the problem, as in emitting a lot of CO2, into being part of the solution, where the new advantage is you can produce a lot of biogenic CO2 converted to biomass, and then into the carbon capture and store it. So our projects can go in 10 to 14 million tons of negative emissions per year.
But I'm intrigued by the S part, because it's come up quite a lot this morning in the earlier conversations, particularly in relation to the Netherlands, that storage is an issue. It's a sensitive topic here. Is that one of the issues that you've come across, or there's public perception and resistance?
I would say in the Netherlands, public perception is mainly around biomass. It's more negative anti-biomass sentiment that we see. But I think that has a lot to do, especially that it was, for a long time, it has been just a subsidy play, what critics would say. It is subsidizing large companies from abroad, like ours, to burn biomass, and that's what sort of pushed in the direction of what everybody was a big fan. And it was also easier for people to listen to people who had ideas about it not being sustainable. Where it is sustainable. It's all about 100% sustainable biomass. You're asking about the storage topic, I don't even see as the biggest challenge in this, because yes, in the Dutch waters, there is more limited storage volume. If you look at the gas fields, this will not go forever. But if you look at other countries surrounding the North Sea, say, let's pick Norway. Norway themselves, they have set out a strategy to become the carbon sink for Europe. And they can, because they just naturally have all these aquifers that they can drill into and store CO2. So the storage side of things is not so much of a problem, but if I say that, what is a real problem is to build up this huge new value chain. because it is really a value chain. You're looking into selling a product that is carbon dioxide removal, but right now there's a voluntary market, which is great. It's great it's there, and it pays good prices in that way. And it pays the prices it needs to enable projects, so basically the cost to us. But what we really need is a compliance market also and the emissions, and then also, for governments, for example, to support and bring together this value chain. Because look at the chicken and egg topic. Are you going to commit to storage? Yes, I will. I have a customer. The customer will say, well, do you have storage? So there we go. We
Right.
with the value, that's what it is, and the value market, take the compliance scheme, and then we can make all of that happen.
Okay, a couple of big topics there that we're going to come back to. But let me turn to you, Rob, who are suffering from jet lag. Very glad that you're here and you're still with us. So you run a company that basically produces a technology that sucks carbon out of the air. And I suppose different to Climeworks, who are a project developer and actually storing that underground, you are working with the project developers. So, I mean, I suppose what do you see as being the major factors in driving the market, or basically having project developers that want to buy your kit?
Yeah, I would say the cost of capture is what's keeping everybody busy, and there's a lot of room for improvement. So when you look at a large project such as where I just come from, Canada. Then the technology, the direct air capture technology, is about 1/3 of the cost of capture. 1/3 is the site, piping, liquefaction, or other adjacent technologies, and 1/3 is cost of capital. Capital providers see this as a very immature, a very risky area, direct air capture, which is very understandable. So it's a very immature and fragmented market with various technologies that are competing against each other. So there's a lot of risk premiums in the capital stack. And it's not easy to actually finance it. So you pay high interest rates and all of that. So in order to bring down the costs, it's not only the technology that has to come down in cost, but also the way these projects are financed.
Yeah, so when we talk about direct air capture, there's always this, it's going to at some point cost $100 a ton. I mean, is that even going to be a thing?
No, the $100 per ton is a bit of a fairy tale, I would say, because, you know.
That's a shame.
Yeah. Well, it depends what you put in the formula. I mean, so, you know, how many days per year do you utilize the CapEx? Or is there a margin for the technology company included? Is this the cost or the price? What is the length of depreciation? What is the price of the energy on that side? So there's no single, let's say, number on a cost per ton.
And Charlie, I mean, what kind of price sensitivity are you seeing? And then maybe coming back to the compliance point, because you're more in the VCM market, so the voluntary carbon market, and looking to the compliance market, what kind of wish would you see that those come together to drive a bit more interest in these solutions?
Well, I think there's two parts to that question around the like convergence of the two markets, but then also what's going to drive the pricing on it. Taking that second part first, that's stating the obvious around economics 101 is risk versus return. And so the cost of capital is reflected in the risk. And what we need to do is help investors understand those risks. And one of the things where the insurance market plays a role is that there is the development of very specific types of insurers who will look at very specific types of risks and take that. So basically experts in particular areas. And one of the things that our sort of climate finance team does is work with both the developers and the investors to break down all the different types of risk, which are quite often non-correlated. So you can have in a project, you can have technology risk, you can have political risk, you have offtake risk, you can have credit risk, reversal, all sorts of different things which one investor might be comfortable with and another investor not be. And the aim is to get everybody comfortable, because if everybody needs to have all these understandings of complex risk, you're only going to have very big teams, and that limits it. So you want to be able to open it up to everybody, and more capital coming in will naturally reduce that cost of capital. So I think that's one thing that we are very much trying to do as insurance brokers. As to the convergence of the two markets, I think that's a much bigger thing that we are starting to see with regional compliance schemes, especially in Asia, where project-based credits are being brought in. The sort of mechanism through Article 6 has helped that. And I think, nothing will kickstart the engineered removals industry over here so much as the project-based credits being allowed into the EU ETS, and if that demand signal's there, then suddenly we've got a price to be aiming to.
So we need we all need to get comfortable and have a bit of a loving around risk to be actually entering the market, but the policy barriers need to be broken down. I mean, Micah, that's an interesting point on the European policy versus what's going on in the rest of the world. When you're advising your clients and you're looking at systemic solutions, how do you look at that? How do you see one area as doing it better than the rest, or is the EU ETS the best that we've got at the moment?
I think the EU ETS is a good example, but it's also one of the best out there, we think, although it's not perfect yet. There's, of course, the free allowances that for especially heavy industry that are one of the main potential applications for CCS, of course, that need to be much reduced. And of course, CBAM needs to be in place to make sure that it's really it's really a stable system within EU in which this can flourish. But yes, it's definitely a good example. I have to say, though, that these markets are not, as was also mentioned earlier, it's not the only way in which you can solve for this chicken and egg problem, or that will the only driver towards these applications. It's typically, these are large scale projects that have multiple parties on typically a single storage site, but there needs to be transport, and typically there are multiple parties that capture carbon and feed into the system. And to get all these parties aligned, that's, I think, where there might be a role even for governments to take more an orchestrational role. And there's examples, right? There's the CCUS valleys in the UK, where with, I think, 22 billion or so of investments. And these valleys are not only focusing then on carbon capture and storage, but also on hydrogen storage, right? To really build that ecosystem, that new ecosystem locally. And other examples, of course, Portals, where there was an industrial system, but there are now multiple parties that come together with financing of the government to help build the infrastructure. So these sort of government, which it is now, right, helping to de-risk at least part of these value chains, we see as a very important part in getting these markets, ready and growing.
Marianne, Alfa Laval is a Swedish company. The Swedish government's doing quite a lot in this area. I mean, are they working as an accelerator with different industries, bringing people around the table to collaborate? Because you obviously, carbon capture you're helping other industries to capture their carbon. So there needs to be more parties around the table. How's that working?
So I can give you just a recent example that the Swedish government pulled in AFRE, that's a consultancy, Swedish consultancy, and industry players like us, Stockholm Exergy, so like supplier, end customer, transport, as well as storage, subsurface companies around the table to work on a work to provide guidance to Swedish government in terms of CCUS. And I think when you look at Sweden compared to the rest of neighboring countries like Denmark, Norway, UK, where they are, it's even more challenging for Sweden in terms of CCUS strategy because they don't have storages. And you look at Norway, way ahead. You look at UK, way ahead. Denmark allowed onshore storages. In Sweden, not possible to do onshore storage. It's also offshore storage is not an option. They're far out. So this cross-border dependency as well, that you finance capture, but there is no storage capacity available, and what happens in terms of the prices that going to come on and being pushed on the emitters to store their CO2, this whole math is even much more riskier, I think, for countries like Sweden. So Sweden is taking a lot of, the government is taking a lot of initiative, but I think that some of the neighboring countries are actually way ahead in terms of allowing those permitting and smoothening the value chain for the rest of the players.
I mean, Jens, on that point, so you raised a really interesting point about money and where is it going to come from. I mean, who do you see, in your view, should be paying for this? And this is a topic that came up earlier in the day. So if you're working with the Dutch government, you've got the BECS project that will hopefully start here, removing, and then again, it'd be interesting, large scale, what kind of scale are we talking about? But who's actually paying for this, in your view? And if these projects are going to happen in other places, who should be paying for it?
Well, in the end, of course, same as with the ETS markets, the parties who are responsible for emitting and reducing their emissions, they need to pay. It's the same with carbon dioxide removal. So it's offsetting. What is this designed for? It's not designed to water down anything in reducing CO2 emissions. So this needs to happen at full speed. However, what we foresee is that some sectors just simply either cannot be decarbonized, or it would be super expensive for them, and super expensive and also for society to decarbonize them. These are the hard-to-abate sectors, and these need to have a different way to offset the emissions they still have in the future. So in the end, this is the price that will need to be paid for that. When we're talking about the EU ETS is a very nice example of a very effective emission reduction scheme. What we need now is, of course, not only throw in negative emission into the same market, it's also criticism that you get a lot, is then watering down the reduction. No, we shouldn't be doing that, because at the end, what is the removal design for? The removal is there to take the last bits that cannot be reduced economically. And then also to make sure that the price for it is that one. Yeah.
So coming to Skytree, what kind of volumes are you achieving just now? And then picking up on the point from Jens, the hard-to-abate sectors, are those the kind of sectors that you're speaking to at the moment? What kind of levels are you going to get to? And do you agree on the point of who's paying for it? Or do your customers agree with that?
Yeah, although what I would recommend is to also take a view of cross-sector collaboration. As we need volume to drive down the cost, but to drive down the cost, you need the volume, right? So how do you break through? I can give you two examples. The Dutch greenhouses, they emit about 6 million ton of CO2 per year that they blow in the greenhouse to stimulate crop yield. It's taken from point sources and also by burning gas on site. So the Dutch government now allowed direct air capture in the SDE++ that was referenced earlier, so that the cost for the greenhouse operator is neutralized and they can switch to direct air capture. That is a way for us to get short-term volume that helps us to drive down the costs. And we develop universal machines that you can use for both utilization at the location where you need the CO2, as well as building large-scale parks for permanent removal. Another example that I hope we will see in the future, I haven't seen serious initiatives yet, is that we piggyback the CCS projects and add a few percent atmospheric CO2 to that neutralized emission stream to prevent that we need to build separate infrastructure for it. So if you piggyback on an existing infrastructure, you just have to put the DEC systems there, and then you shave off, let's say, 2/3 of the cost of capture. And those are large emitters that have the storage capacity, if they have a CCS project, the piping, but they also have the industrial land. And in an ideal world, they have the capital, they have the expertise. And in an ideal world, they also have industrial waste heat that you can use as a power source for catching the CO2 molecules from the air.
I'm going to ask for questions in a moment, so if you've got any questions, be ready to raise your hand. But I want to come back to the title of the session now, which is talking about the large-scale approaches and get an understanding of where we stand. Jim Skia from the IPCC talked about having to remove, 6 to 7 gigatons of carbon by the middle point of the century with novel or new technologies. Mariam, you already talked about, was it 1 million tons? Jens, what kind of volumes would the BEX projects in the Netherlands be removing?
All projects together would be 8 to 10, 3 to 4, so 11 to 14.
Right. And out of interest, because this is a topic that's come up earlier, are we looking to the future and having like a few really big projects that are removing 40, 50 million tons, or is it always the approach going to be, it's going to be lots of little things? I don't know. I mean, Mariam, you're working with lots of different industries. Do you have a view on where's this volume going to come from?
Actually, majority of the projects that they're receiving FIDs today and they are moving ahead, you can see that they're really 300,000 to 600,000 ton range. That's at least from the FID perspective that it's moving ahead. And I can tell you that we call it a feed fatigue because we are preparing. Everyone is there's a pipeline of feed projects that they're not hitting FID. So, and in this feed fatigue, majority are actually, they have scaled it down. We saw initially projects that they were 5, 10 million ton. They never got FIDs. So I think the licensors are also becoming much more smarter and standardizing around 200,000, 400,000 systems. So then you can sell more of them if the projects are bigger. But personally, I think it's going to be a lot of these smaller ones that they will, and it's economically probably even more viable in terms of de-risking and getting capital investment or insurance buy-in.
Yeah, Micah, you were smiling because your idea of a large-sized project off stage was 10 million. That would be the ideal.
I've looked at it. I'm looking at this market for on and off for 10 years now or so. And then 10 years ago, it was, we're just going to decarbonize the whole steel plant in one go, right? Yeah. We're just going to put a huge suction thing at the top and we're taking everything off. And that would be around 10 megaton, right? For this one site. However, like also we see with other technologies, it's typically smarter to start with small things and building it out. And indeed getting those standardization, getting these markets ready, right? And then build up from there. Especially it's becoming modularized and standardized. That's very helpful. But my concern would be if you think about the scale you need for the storage, that then you need multiple smaller modules from multiple different sites, making the coordination question that we talked about earlier even more difficult. So I think it's a good logical development, but also I feel there's it makes coordination even more important. Yeah.
Yep.
I would say smaller and larger projects will just coexist.
Yeah.
I mean,
yeah.
It's also not really a competition between, is it not nature-based or engineered or remote?
Yeah.
You just simply keep them all.
Yeah.
And you need to see where you find the gold nuggets, you will dig for gold. Right? And if you find here, you'll pick here, and you find there, you'll dig over there. So this will also define, for example, our power stations, why we are connected these huge sites, well, because we have these huge power stations. They are there, they've been paid for, and they can be converted. Would you now build this simply only to do the current price at the moment? Probably not. Or would you do it here? Well, maybe different locations, right? But you have them. So it's also a question of what is cost-efficient and cost-effective infrastructure in Bulla, ideally utilizing or building on stuff that you already have. And then again, as you say, a large project can be a good anchor customer.
Yeah.
It's to also really drive a decision to FID also for the full chain. And then a lot of these smaller projects, of course, can help. Also, it's also not dreamers. I mean, we're looking at our targets, of course, to go for the 8 to 10 million tons. But also, this is not going to be just one go. And on the way there, we'll also take smaller steps just to make sure we have been operating for more than 10 years already, and pilot installation of one of our power stations to understand the technology properly. The next scale up can be roughly 100,000 tons. And then you can take the largest steps. But it's also a question of when is the market going for that, right? Because I mean, we all in the end need to find somebody
Who's going to buy for you? Yeah.
in the monetary market right now is big enough to spend 300,000 tons per year, but not 10 million tons per year. We will not take the decision that like we put 10 million tons based on 300,000.
Right.
I do want to actually add just one point, because from the technological perspective, when we talk a lot about cost and large scale costing down and so on, something that we have seen more and more of it is that the licensors are also really trying to standardize their solution. But the end customer, because they want to de-risk financially and they want capital, they have very, very strict terms and conditions. And a lot of these terms and conditions are actually based on oil and gas industry. It's not even for onshore industry. And that makes everything like end customer wants this terms and condition, licensors have to obey, we have to obey. You turn out to have a fully engineered to order solution. Cost is up on the roof, because in the end of the chain, all of them, they're really goes hand in hand. If we want to do the cost down, we have to also accept like better terms and conditions with really valid risk estimation. I think right now the market is very conservative in terms of terms and conditions, and that makes everything very much engineered to order. So every time we engineer something, that's just one project that goes out, and thinking about 10 million ton, oh my God, it's very expensive.
Which comes back to Carly's point on getting everybody comfortable with the types of risks, going for standardized solutions and not running after the golden nuggets.
Yeah.
So are there any questions from the floor? Please say your name, your company, and a short question, please. Got a couple of minutes for...
Hi, Eve Pope from ID TechX. How are we going to power direct air capture and even point source capture for these large-scale projects? Already in the US, we see direct air capture projects losing out to data centers.
Rob, do you want to take that?
Yeah, great question. Super important. What we don't want to do is compete with grid purposes, companies, communities. So the art of the matter for direct air capture is to find the intersection between use, in case of utilization or storage, and then available energy, renewable, obviously, and there are numerous sources for that. You can take abundant wind energy, a large project we published in Texas will do that, to prevent negative pricing on the grid, and then use that abundant wind energy to power direct air capture or geothermal, industrial waste heat, as I already mentioned. But the last thing you do is plug it in the grid and take that as a power source.
Any more questions? Yes, please.
Hi, thank you. Helene Koning, Eindhoven University of Technology, and I'm also part of the Netherlands Scientific Climate Council. We released a report on carbon dioxide removal last July. We recommended, actually, contrary to what you were saying, Charlie, I was wondering if you can comment on it, to keep carbon dioxide removal as long as possible out of the emission trading scheme, to keep the incentive on emission reduction as high as possible. I was wondering if you could comment on that recommendation and mixing the carbon markets for emission reductions with the markets for carbon dioxide removal.
Great question.
So my comment was coming from the viewpoint of having a price that would stimulate economic activity into carbon removal technologies. I think one of the concerns is really from any project developer right now who is going to be investing, and well, them and their investors coming in to start a project, and it's really they at that earlier stage are taking all the risk, and what their concern is the lack of buyers of these removal credits. And we've seen a few big tech companies who are very cash rich and are able to buy these credits at prices which it's hard to, because there's not much liquidity, it's sort of finger in the air working out what the price is. And so these people can come in at that, but that's not sustainable for a mass market. And so it means that there is just not a huge pool of buyers out there at the moment. And so when I said that there needs to be movement into the ETS, it's coming from that standpoint that if there's a liquid price, then people have something to work towards and know, well, if I develop it at my projects where the cost of production of the credits are going to be underneath the price where the ETS price is, there's a huge incentive to work towards that. And more from a behavioral economics kind of perspective is where I was coming from.
Thank you very much. We've now run out of time for the panel, but I think that's a great point to end on. The urgency of the issue is there, and there's an incentive for all of us to act. And so hopefully some of the projects that we've touched on today will scale, whether there's multiple projects or some very large projects. But thank you very much to the panelists.
Thank you.
Thank you very much, Jack.